Hey, what's going on everyone? PK Investing here, bringing you episode 11 of my dollar a day challenge. Before I begin, I want to thank you all for watching and liking and subscribing. I really enjoy making these videos, and I appreciate all your support. Now, without further ado, let's get into it. I'm sure you've all heard of an older gentleman named Warren Buffett. Mr. Buffett is a legendary investor, and he's the chairman and CEO of Berkshire Hathaway. Berkshire is classified as a multinational conglomerate holding company. I know that's a lot of big words, but it basically means that, unlike most companies, Berkshire doesn't actually produce anything. Rather, it buys and holds significant amounts of shares of other companies. To give you an example, Berkshire Hathaway holds over 400 million shares of Coca-Cola. Fun fact, 400 million shares of Coke pay out about $164 million in dividends every quarter. Some other big names you might recognize are insurance company Geico and soft-serve ice cream restaurant chain Dairy Queen. So you get the idea. Berkshire Hathaway is like a big gumball machine, and all the little gumballs in it are pieces of companies or just outright entire companies that it owns. Now, back to Warren Buffett. At this point, you must realize that being the CEO of such a company could make one very wealthy. And in the case of Mr. Buffett, it certainly has. At the time of this recording, Buffett's net worth is a bit over $70 billion. Do keep in mind that this isn't how much cash he has in the bank. It's the combined value of all of his assets and cash. Still, 70 billion is a big number. Now you might be asking yourself, what does all this have to do with Tesla? Well, it was reported earlier this month that our favorite Tesla CEO, Elon Musk, actually surpassed Warren Buffett in terms of net worth. When Tesla's stock price spiked last week, so did Elon's net worth, and it gave him the push he needed to beat out Buffett. Now don't get me wrong, Warren Buffett's an excellent investor and a very successful person, and maybe by the time this video comes out, Elon might not be worth as much. But Elon's net worth boost was directly related to Tesla's stock price boost. See, Elon and Tesla are linked together. What happens to one usually has a very similar impact on the other. This has to do with Elon's compensation as CEO of the company. Elon doesn't get paid the same way other people do. Most people, like you and me, have jobs that either pay a yearly salary or an hourly wage. This isn't the case for Elon. His compensation comes purely in the form of stock options, and those stock options are locked behind company goals. The first goal, which was unlocked earlier this year, was for Tesla to reach $20 billion in revenue and to have a sustained market cap of over $100 billion. That happened, and Elon was awarded the option to purchase about 1.7 million shares of Tesla at around $350 a piece. Considering the share price is hovering around $1,500, that's a pretty good deal. But you can see now that Elon and Tesla are directly linked. When Elon does well as CEO, Tesla benefits, its stock price increases, and Elon's net worth goes up. When Tesla doesn't do too well, its stock price decreases, and this hurts Elon, who's the company's largest shareholder. This relationship and compensation setup serves to provide the greatest incentive for Elon to make his company succeed. His wealth literally depends on how well Tesla does. This is why I have a lot of faith in him and the way he does what he does. Elon has very little room for error, and the results of a massive failure would be catastrophic. But whenever he pushes something revolutionary, every time he makes Tesla take that next step forward, he increases the value of his company and gets himself one step closer to his next payday. Alright, let's get into my dollar a day challenge. Every day that the market is open, I buy $1 worth of Tesla stock. At the end of each week, I update my spreadsheet with that week's purchases. Recently, I invested my 50th dollar into Tesla. This is pretty exciting for me, since Tesla is the only growth company I currently hold. Taking a look at the first 3 weeks of the challenge, those dollars have done very well. On average, they grew by about 75%. This is very different from the most recent 3 weeks, which on average resulted in a loss of 6%. But that's alright. Tesla's share price is pretty volatile and unpredictable. One day, it'll shoot up 5%, and another day it'll drop by 4%. Literally anything could happen. When it comes to the long term, I'm bullish on Tesla, meaning I think the share price will increase. But when it comes to the short term, I'm kangaroo-ish, meaning I think the share price will bounce up and down over and over again with seemingly no order. That's why I think dollar cost averaging is effective here. The share price is so chaotic sometimes that it's much easier psychologically to just dollar cost average and ignore all the noise. We can see now that I own about 0.052 shares, and overall I'm up about 35%, which is almost $20. I think Tesla's share price should stabilize around $1,500 for a while, but who knows? The important thing to remember when investing long term is that the current share price isn't too big of an issue. The real goal is to generate gradual, sustainable wealth over time that will support you and your family for generations to come. Thanks for watching, everyone. Take care, and I hope to speak with you again soon. I am not a financial advisor. Investing always involves risk. This video was created for entertainment purposes only.